So here's a fascinating problem for you. How do you get a read on the economy's health when all the official government data suddenly goes dark?
Right now, with a government shutdown, we're basically flying blind. All those critical reports on jobs, inflation, and growth, they're on hold. It's kind of like trying to drive across the country without a GPS. So, where do we even begin to look for answers?
Well, in the next few minutes, we're going to pull back the curtain. We're going to show you the powerful alternative signal that all the experts are watching to get a real-time picture of the economy. Let's dive right in.
And that secret signal? It comes from an industry that's basically the circulatory system of the entire economy, the big banks. You see, their quarterly earnings reports are way more than just numbers on a page. They are a direct window into our collective financial lives. Think of the banking sector as a massive economic barometer. I mean, banks are involved in pretty much every transaction you can think of, from you buying your morning coffee with a credit card, all the way up to huge loans that create new businesses. So, their financial health is a direct reflection of our own. And this connection plays out in some very real ways. When lending is up, it means people are out there buying homes and cars. When businesses want to expand, who do they turn to? The banks. And all those massive corporate deals, the mergers and IPOs, that all flows right through Wall Street. The bottom line is pretty simple. If the banks are doing well, it's a really strong sign that the rest of us probably are too. So, what are the banks telling us right now, in this moment of uncertainty? Well, the latest earnings reports are rolling in, and believe it or not, the message is surprisingly clear and optimistic. I mean, you really don't get much clearer than that. This quote from Bank of America's CFO pretty much sums up the feeling among the top executives. They're seeing real strength with everyday consumers and with big corporations. And this isn't just some hopeful talk. It's backed up by some serious data. And this chart, wow, it really puts it all into perspective. A write-off, that's just when a bank basically gives up on getting paid back on a loan. Right now, that number is incredibly low, less than 1%. Now compare that to the recession back in 2010, when it was over 2%. This tells you that people and businesses are paying their bills, and that is a key sign of financial health. And the good news doesn't stop with just loan repayments. A strong stock market is generating big fees for banks. We're seeing a real comeback in companies going public for the first time in years, and big corporate mergers are on the rise. All of this activity doesn't just make money for banks. More importantly, it signals real confidence in the future. Okay, so things are looking pretty good, but it's not all sunshine and roses. Bank executives are also keeping a close eye on a few potential storm clouds on the horizon that can change this whole picture, and fast. The main risks? Well, they're pretty straightforward. If this government shutdown drags on, that could really hurt consumer spending. Any big swings in the market could slam the brakes on those profitable IPOs and mergers. And the big one, if the job market starts to weaken, it gets a lot harder for people to pay back those loans. And you're even hearing this from the optimists. Goldman Sachs CEO David Solomon, for example, said that while he's hopeful, the job market right now is, in his words, a little bit softer. It's a subtle comment, but it's an important warning that things could be starting to shift. So with all that going on, there's actually another massive story unfolding inside the banking world itself. It's a trend that's been pretty quiet for a few years, but is now roaring back to life. 52, that's the number of bank mergers that were announced in just the last quarter. That is a huge spike, a 4-year high. What this means is that banks are starting to buy other banks at a really rapid pace. Now, this isn't totally out of the blue. The industry has been shrinking and merging for decades to cut costs. But that activity really slowed down recently, especially for the bigger fish. Well, it looks like that pause is officially over, and large regional banks are making major moves to join forces again. And this leaves us with the really fascinating final question. On one hand, the bank's data is painting a pretty bright picture of the economy right now, but at the exact same time, the banks themselves are consolidating. So you have to ask, is this a victory lap, a sign of confidence and strength? Or is the industry quietly getting ready, bracing for a storm that the rest of us just can't see yet? Something to think about.